Yes, hello. So I'm back again for financial accounting and reporting lessons, liabilities. So this is an overview of liabilities. So this is kind of a summary lesson for liabilities. Okay, so but before I move on, please share it with your friends or tag them or comments if you have comments or your questions. So I'm more than willing to answer all of it. Okay, once I have time. So I'm reading your comments, I'm trying to reply, and I hope you are enjoying these financial accounting and reporting lessons. Always remember, Jonathan, your accounting coach, is always here to help you. Okay, so moving on. So, what is our agenda of the day? So, liabilities. I'm going to give you the definition and measurement, and there is one problem that we are going to solve. Okay, so first, what is liabilities actually? So the conceptual framework for financial accounting define liabilities as present obligations of an entity. When you say it's present obligations, so the liability should be identified. Okay, then arising from past transactions or events. Again, this reminds you of the accrual basis of accounting. This means that the liability is not recognized until it is incurred. Okay, so there is already a past transactions. Meron nang nangyari. Like for example, you purchase inventory. Okay, you purchase an items, then you have accounts payable for that. So that is the past transactions. But usually, ang mga companies, they give credit terms. So that means the cash outflows will probably be later. So the settlement of which is expected to result in an outflow. Okay, so there is a payment, there is a cash out later. Okay, from the entity resources embodying economic benefits. What does it mean? Of course, the company will benefit from that inventory because they are going to sell it with a markup. So there is an embodying economic benefits later. Okay, once they sold the inventory. Okay, so that is the definition. So what are the examples? Like what I have said, we have accounts payable to suppliers for the purchase of goods. We have amounts withheld from employees for taxes and contributions to SSS. So it's like you have income taxes to be paid. So no income tax payable, as well as you have accruals for wages, interest, royalties, product warranties, profit sharing plans. So those are some examples of liabilities. And another is you have cash dividends declared but not paid. Okay, so this means the company declared dividends that they are need to be paid to its shareholders. Okay, meron declaration of dividends. Again, merong tanong last time, the obligation is to issue the entity's own shares. Is that a liability? No, this is what they call share dividends. There is no accounting liability. Okay, another example, deposits from customers and advances from officers. We have also debt obligations for borrowed funds, of course, notes, mortgages, bonds payable, income tax payable, and of course, unearned revenue. Okay, so those are the examples of liabilities. Again, we need to separate current liabilities from non-current liabilities. Same as what we did in asset. We have current asset and non-current asset. So you need to go back dun sa topic about assets kung paano natin sineparate. Okay? For current liabilities, is under Philippine Accounting Standards 1, paragraph 69 provides when that entity shall classify a liability as current when the entity expects to settle the liability when the entities within the entity's operating cycle. When you say operating cycle, what does it mean? So a good example is when I buy, okay, inventory and then turn it into cash. Okay, so yun yung operating cycle. Binenta mo yung inventory, then after that, yung customer is nagbayad sa'yo. So you turn it already into cash. That is the period of operating cycle. Is this necessarily mean 12 months? No. Okay, so no. Okay, again, the entity holds the liability primarily for the purpose of trading. Okay, so nagkaroon ng trading. Okay, the liability is due to be settled within 12 months after the reporting period. So here comes a little bit of complication. When you say to be settled within 12 months after the reporting period, Kasi actually, there is a portion of current liability of long-term liability. Okay, so later I will discuss that again. Okay, then the entity does not have an unconditional right to defer settlement of the liability for at least 12 months after the reporting period. So meaning, wala kang conditional right na i-extend yung terms, no? Kung nag-expire na yan after 12 months or after that reporting period, i-extend mo yung liability? No. Kasi once na na-extend mo, nagagawa mo na maging mas mahaba yung period, that means it doesn't fall to current liabilities. It will fall on the non-current liabilities. Okay? So now let's move on to non-current liabilities. So this is a residual definition. Okay, of course, sasabihin nyo, bakit ganun yung definition? All liabilities not classified as current are classified as non-current. Of course, kung hindi yan na-define as current, then falls into non-current, no? So nakakatawa lang siya, but you need to memorize what is the meaning of current. So you don't need to memorize what is non-current. Okay, so non-current portion of long-term debt. So like what I have said, there is a portion that you need to pay within 1 year. So that falls on to the current portion. And then for the next year, okay, yung more than 1 year, that means that is a non-current portion of long-term debt. Okay, finance lease liability. And we have deferred tax liability, long-term obligation to entity officers, and we have long-term deferred revenue. Okay, so there are other discussions for that later. Okay, current liabilities, again, the measurement is initially measured at present value and subsequently measured at amortized cost. Okay, non-current liabilities, like for example, bonds payable and non-interest-bearing note payable. So initially measured at present value and subsequently measured at amortized cost. Okay, so there is an amortization na nangyayari. So we will discuss that and give examples sa topics for notes payable, bonds payable. Okay, so if the long-term note payable is interest-bearing, it's initially and subsequently measured at face amount. In this case, the face amount is equal to the present value of the note payable. Okay, now let's answer problem. Okay, so to have an understanding of how you report accounts payable or the liability in the balance sheet. Here, again, how to answer the problem, you need to look at the question first. What amount should be reported as accounts payable on December 31, 2018? Okay, then you go through one by one with the bullet points. If the situation or the problem is like this presented, then that's the way you calculate it. So Sheila Company reported accounts payable on December 31, 2018. Before considering the following data, you have 2,200,000. So meaning there is no adjustment yet. Okay, so goods shipped to Sheila, FOB shipping point on December 22, 2018 were lost in transit. The invoice cost of 40,000 was not recorded by Sheila. On January 7, 2019, Sheila filed a 40,000 claim against the common carrier. So here, the transaction is FOB shipping point. When you say FOB shipping point, then this should be part of Sheila. Okay, Sheila's accounts payable. And here, there is an issue kasi nawala yung 40,000 no, during the shipment. So nag-file siya ng claim. Okay, so what will happen here? So what you need to do is very simple. So this is part of accounts payable. So it should be add. Okay. Second bullet point, you have on December 27, 2018, vendor authorized Sheila to return for full credit. Goods shipped and billed at 70,000 on December 3, 2018. The returned goods were shipped by Sheila on December 28. So a 70,000 credit memo was received and recorded by Sheila on January 5, 2019. So the recording should be actually falls on December, not on January. So that is deduct. Okay, next, on December 31, 2018, Sheila has 500,000 debit balance in accounts payable to Ross, a supplier resulting from a 500,000 advance payment for goods to be manufactured. Okay, nagkaroon ng advance debit balance. So this one should be added. Okay, again, here in the problem, you have the claim. So what is the status here actually? So Sheila Company suffer a loss of the goods in transit because the goods are shipped FOB shipping point. But Sheila must file a claim against the common carrier. Okay, so at the end of the day, if he will win the case, then he will still have that 40,000 back. Okay, so what is the answer here? The answer is D. Okay, the answer is D. Okay, let me go back. The answer is D, 2,670,000. So I hope you get the answer correctly. Okay, so again, thank you so much. And what we learned, we defined liabilities and current liabilities, non-current liabilities. I give you the measurement, okay, at the face amount or the present value, and then subsequently at amortized cost. Okay, and then we answer one multiple choice question. So if you like this type of format that we answer a question at the end, so please do leave your comment. Okay, so the next topic will be bonds. So I really like this topic, bonds payable. And again, if you haven't done it yet, please do follow my FB page, CPA Dreams, and then Instagram page at CPA Dreams. And if you haven't subscribed yet, please do subscribe. Click the subscribe button to be updated anytime that I will have a lesson. So thank you so much. I hope I'm helping you in your journey to become a certified public accountant.